So looking at the Aussie, we're getting that move to the upside as we were talking about. All right, if you take a look at the latest Arujo report, let's take a look at what we had here. Momentum up was paused on the, oops, sorry, I'm looking at dollar. Let me head lower. Okay, right here. Momentum was shifting down on the monthly chart. Temporary force was to the upside because we hit a weekly demand zone. What have I been saying about this weekly demand zone? Be careful, we're in demand. Be careful, shorts are very aggressive. We got to see some profit taking. And when you close shorts, what happens with price? Move up. Okay? We have already started to see a bullish. And this move could extend higher up the charts in this coming week. And that's exactly what we're seeing now. Okay, we're seeing that bullish move from the weekly area of demand caused by profit taking. So again, this move to the upside is caused by profit taking. It's not caused by an accumulation of a position. So you can jump on board and try to get in long, but you don't know how far up it's going to go. We're just about to hit a daily area of supply, so we could see a rest from the profit taking before a continuation. But one thing I want to point out here, take a look at this, okay? The descending trend line on the daily chart has now broken, meaning the daily trend is broken. So there's no structure keeping price in any specific formation now. Once the daily structure is broken, we look up to the weekly and we can see that the weekly structure is still in place and there's room to hit that weekly descending trend line and the weekly supply zone. Now, does that mean we should take longs from here to here? No, it does not mean that. Can you take shorter term longs once this daily area of supply gets taken out? You know, halfway towards that? Sure. But remember, you're swimming against the current and you're going against the phase of the market right now. Profit taking, we don't want to be accumulating when there's profit taking. It may work, it could possibly work, but the odds are lower. Ideally, what we want is to see price get up here to this weekly area of supply, and then we see gold reversing, the dollar reversing, the Kiwi dollar reversing, the institutions starting to reaccumulate their positions, and then we accumulate. And this is the ride we want to go for. Okay? This is the ride we want to go for, not this one. This is the ride, because we sit in our rafts, we put our paddles in the water, and we don't even have to row. We just have to use the paddles for steering, and the current will take us, okay, in a very specific direction, straight down here. Okay, but trying to figure if it's going to get to this area is the difficult part, because you know what? It can come halfway and then reverse. There's a weekly descending 20 EMA right there. And a lot of times traders are looking at that for signals to short. And the momentum caused by the reaction from hitting that 20 EMA just might be what the institutions will jump on board with. Okay? Those things are possible. That's why going long is not ideal. Right? So we wait and be patient. We already made, or you know, the school's already made a great return on the portfolio, so we're not in any rush. You know, June just started. We're just at the beginning of June. Right? If we have to wait through June and not take any trades, fine. If halfway through July it's the most ideal time to trade, and then we hold trades from July, August, and then we get out in September and we make another 25-30%, you know, we're going to be up just shy of 50% for the year. I mean, who's complaining about that? Not me. September. And then we still have October, November, December, another 3 months, and who knows what can happen with that. Okay? So, patience.